Domestic tourism might be better off than where it was in 2020, but international travel may still take some time before it starts to get back together. Another thing that's worth looking at is the presidential elections. From an economic perspective, we've seen it over the past few years. Every time there's a presidential election, it helps spur up the economy because there's a lot of election-related spending, from advertising to consumption, to the rental of equipment. And this will be a prevailing theme as well. There will be a lot of campaigning that will be done online. So either services that are highly connected to social media marketing will have a ripple effect also to the economy as well. Hey guys, so in this video, I want to share my thoughts on the Philippine markets. I know I've talked a lot about cryptocurrencies over the past few weeks. It's just truly been super exciting. There's so much development from a technology front, but I do know there are some of you that have been asking my 2 cents on what's happening, at least from the Philippine stock market point of view, and where the economy is or how I think it will go for 2022 as well. Please do note this, by the time I'm recording this, February 2022, I really believe that we are better off already now than where we were at the start of the lockdowns last March 2020. If you try to go back 2 years ago, there was a lot of uncertainty. We didn't actually know where the market was heading. We weren't actually sure how the response will be, when medicines could actually come out, when would we be able to go back to normal, and how would things be. But fast forward 2 years, there are certain things already right now in 2022 that are part of the norm, and the fact that everything online right now is so relevant, is so important, and a lot of people are relying on e-commerce, a lot of people are relying on fintech, everything that the internet supports. I'm sure everyone knows this, that wearing masks is something that's very, very normal, but I think we've seen it in a way that it doesn't feel as scary as what it was before. I think part and parcel of that is that we have more facilities that have been created. There's a lot of aid, medicine, and vaccines also that have been set out. We already know also how to prevent it, how to combat it. What do you do when you feel that probably you got exposed also to it? And that in turn removes a lot of the uncertainty along the way. And I've been saying this in a lot of the videos that I created. It's uncertainty that causes people to be a bit risk-off in how they treat their investments. But from 2020 to where we are right now, I believe that we are at a point where we've seen, at least from this whole illness perspective, that we've seen the worst already. We've gone through areas where numbers have spiked, which affected a lot of people's lives. But as you've seen it also over the past few weeks, numbers have spiked, but maybe because a lot of people already have been vaccinated, that it doesn't seem as deadly from where we were 2 years ago. So from that perspective, I believe that it's not as uncertain anymore. And please do note that all of the drops that we've seen for the past 2 years has been highly connected to it. The fear, the lockdowns, the spiking of the cases, it was all connected to those things, and the businesses that got hit also because of that. And I think what we're gonna see this year is that there will be some spikes, there will be some cases that will continue to be evident, but it just goes to show it. They're even letting in foreigners come to the country also right now for business and leisure, and that's something that will help spur economic growth. What we can expect for 2022 is the economy will continue to recover, the economy will continue to open. However, there will be certain things that I don't believe will go back to 2019 levels. There will be certain facets on the way we would do things that, because we were so used to how it was indoors, that I don't think those things will go back. I don't think people will stop watching Netflix. I don't think people will stop their subscriptions of streaming. I don't think people will stop ordering online, regardless if it's ordering meals, groceries, or items, because people saw the convenience. It's just the fact that I was in the grocery a couple of weeks ago, and the time that I spent lining up, I would have saved a lot of time if I just ordered and have it sent to my doorstep. I believe that you multiply that to the number of people thinking that way, there will be a larger impact that we're not going back. So I think e-commerce will still be a prevailing theme. Streaming will be a prevailing theme. Fintech, transferring of money online. When you're used to sending money using QR codes and not bringing cash anymore. Why would you go back to that particular type of setup? Because of that, I really believe that work from home will still be a thing. It may not be full work from home. It may not be the same at the height of all of this, but I really believe that a lot of companies will employ it because it works. Imagine people get to save time. Imagine, aside from people getting to save time, they're not wasting their lives in traffic. They're not wasting a large portion of their day traveling 1.5 hours, 2 hours to the central business district and then another 1.5 or 2 hours back. They get to either work more, and that has been also the narrative. And one of the reasons I think that they get to work more is because they're not also as harassed and as stressed that they have to wake up early. And even clothes, if more people just continue to stay at home, it will still hit consumption in terms of what people are buying. I haven't bought shoes for the past 2 years. I haven't bought coats, jackets, polos over the past 2 years. I've barely spent for clothes, but in the same way also, since we're at home, there are certain things that we would spend on, from gadgets that would make us more comfortable, and I don't think that will change. But what I do think will change is that those that weren't able to travel last year and the past 2 years, I really believe they're gonna travel this year, but I don't think that we're gonna go back yet to 2019 tourism levels and even the level of traveling, because at the end of the day, as long as this is not over, it will still be a pain, it will still be a hassle to do a lot of international travel. So I think domestic tourism might be better off than where it was in 2020, but international travel may still take some time before it starts to get back together. Another thing that's worth looking at is the presidential elections. From an economic perspective, we've seen it over the past few years. Every time there's a presidential election, it helps spur up the economy because there's a lot of election-related spending, from advertising to consumption to the rental of equipment, and this will be a prevailing theme as well. There will be a lot of campaigning that will be done online, so either services that are highly connected to social media marketing will have a ripple effect also to the economy as well. And looking at it from a stock market perspective, after each election, from at least Duterte to Aquino, there have been upward moves in the stock market a few months after the election was conducted. So from a stock market point of view, we've seen historical data that has shown that it has gone up in the past after elections. From an economic point of view also, election-related spending is good for the economy also as a whole. So that being said, what would be my approach? I still won't change my style. It will still be dividend investing. I love dividends. So I'm still gonna focus on the stocks, and I've made a video about this yesterday talking about dividend stocks. I'm gonna still focus on the companies that are giving dividends that will give me a dividend yield above 5%. But I would look at now traditional companies that may have been affected over the past 2 years. And as we start to reopen, I really believe that sentiment will start to shift their way as well. That given that they're traditional, given that their business model is not as resilient to the pandemic, but as we start to reopen, revenue streams will open up for them. Above and beyond revenue streams opening up for them, sentiment will also open up for them as well. So the large traditional companies, in my opinion, will be very interesting. I want to add this also to the mix, that there are some companies that are, in terms of their business model, in terms of their earnings, in terms of their brand, they're really good. It's just that they've been battered over the past few months. It could be a combination of sentiment, it could be a combination of a lot of things that's happening globally, but I'll also take a look at them. I guess what changed from my perspective right now is that since there's a lot going on, instead of just focusing on shorter trade durations, I'm stretching out my timeline also. It will allow me to position, hold it for a longer time frame, and then I start to assess if I still want to hold on to it at that particular point in time or take profits as well. So I guess because I'm getting older, I'm 38 years old, I'm turning 39 this year. I'm close to 40 already. When I started investing, I was in my early 20s, and that's why I guess I'm changing also the way I would approach my positioning in the market as well. So, but in terms of where I believe we are from an economic perspective, I really believe that we are already better off. I believe the worst is over. I believe that a lot of those companies that are really good and really resilient have done enough pivoting and innovation also to help them, that given that we're still not out of the woods yet, they've already figured out ways on how they can be profitable, how can they be more efficient, and how can they actually maximize what's going on right now and come out of the gates running. So if you're watching this and you've experienced a lot of downward turns over the past 2 years, you've experienced a lot of uncertainty. Use that experience to let you just get better in your investing. Because at the end of the day, it's a marathon, not a sprint. And if you've experienced downward moves, you've experienced loss, you've experienced your portfolio in the red, it's okay. No one is in the market to play a perfect game. Always invest based on your timeline. Always invest based on your risk tolerance. Always invest based on your time horizon. And if company that you're investing in is fundamentally sound, if it drops and you think that the thesis of why you bought that company has not changed, that also will give you an opportunity to stack and buy it at a lower price to give you a better upside later on. Again, provided that you have studied the company and you know its underlying fundamentals, or if you're a dividend investor also, and as you started to study it, that as it drops, your dividend yield will be higher, then there's nothing wrong with it. Again, you don't have to compare what you're buying with what other people are doing. You don't have to compare your trades compared to what other people are doing as well, because at the end of the day, it's your money. At the end of the day, no one will take more responsibility for what you have than you. So please take the time to do it on your own. Please take this time. We're still at the start of the year. You still have a lot of time to be able to refine and build your craft and to become bigger, better, stronger. So I guess I want to end it with this, that in spite of what's going on, I think bigger and better days are ahead. In spite of what's going on, we've seen the worst already, at least for this iteration of what brought the market down over the past 2 years. Things are opening up, the economy is starting to get better, and the companies that are big, the companies that are good, the companies that have been resilient, I really believe will just continually do well and come out of the gates running. So there, if you guys have any questions, put them down below. If you want me to talk more about Philippine stocks again, just let me know, give me your thoughts, give me your questions, and I'll try to make videos on top of that. If you want to learn more about fundamental analysis and technical analysis, we have some courses down below. If you want to join me for my Investment 101 Masterclass happening this March, we have a live session that's happening, 6 different topics, 6 different days, all in the evening, all online, with one goal: to help you, to give you the right information on how you're supposed to go with your investing. And if you want to learn more about the stock market via books, check it out down below. And I guess that's it. This is Marvin Germo. I hope this video helps you trade well, trade strong, trade smart. See you all again soon, and God bless you all.